Hey everybody, I want to go over some more earnings setups this week that I think are going to be pretty popular. First, let me get this off the screen because this doesn't work on post market. And we are going to be going over Microsoft, Meta, Hood, and Carvana. For Microsoft, we rate them as a 5 out of our scale of 10. Alright, short pause there just to get some notes ready so I can make this video super short for you. Microsoft is rated a 5 out of 10. The legs can be 8 to 9 points off the money, or 8 to 9 strikes off the money. For our setup, remember, we always use the closest expiration. You guys can try to adjust that according to your own strategy, your own risk, the own premium you want to pay, whatever you guys want to change. But we are looking at 492.5 to 535. Just like that. Let's get this off the screen as well. Don't need that. So it's not that large of a square, and if you applied this same pricing into the previous earnings release, you would see that Microsoft actually won. So props to you guys if that's something that you traded last quarter. We're going to jump to Meta next. Now Meta typically has large moves after earnings. We are looking at a 6 out of 10 on our rating and 24 or 25 strikes off the money. With the current pricing, we're looking at 637.5 to 770. Pretty large move, as you guys can see. They typically do have around, I believe, a 10% move after earnings, but that's going to be nothing compared to Carvana, which we are going to cover last. First, let's jump to Hood. Robinhood is rated a 4 out of 10. We have 8 to 9 strikes off the money, and with the current price, we are going to be looking at 98 to 115. If anybody is familiar with trading Carvana stock, especially around earnings, you know that they are super volatile in this moment. For our strategy, we have them rated as an 8 out of 10, and that's going to put our legs between 270 and 415. So this is a major swing that we're looking at. Okay, this is going to be a good time to cover this. Carvana, like I previously said, is an 8 out of 10, which means that it's highly probable to beat its priced in earnings move. However, with a rating that high, to me that says the market has previously mispriced it for quarter after quarter after quarter. This is not something I would gamble with and expect the market to continue to misprice. So although it has a high probability, or historically it has had a high probability, I'm expecting the market to adjust to that, and I could be wrong, and this could just be some type of gambler's fallacy, but at some point the market will correct itself, and I do not think that this is a good trade despite it being the highest rated. I actually believe that the best trade on here is going to be Microsoft as a 5 out of 10, which actually puts it as the second worst setup or the third best. Remember, Microsoft is a 5 out of 10, Meta is a 6 out of 10, Carvana is an 8 out of 10, and Hood was a 4 out of 10. We're really looking for that perfect combination of underpriced and overpriced coupled with high volume. That's how we ended with such high returns despite having only an average win rate. Thank you guys for watching. I hope you enjoyed. Look out for some more earnings trades coming this week, and I'll be posting some more results from last week. Thank you guys, and stay safe in the markets.